Get your free copy of the complete tutorial at www.teachucomp.com/free. Most assets that have relatively long useful lives can be broken down into three categories: property, plant, and equipment. This category of assets includes land, buildings, vehicles, and furniture. Most of these items are subject to depreciation. However, we will be discussing depreciation in a later lesson. First, let's look at an example of a balance sheet using property, plant, and equipment. Notice for our example for XYZ Inc., they have property, plant, and equipment listed with the individual accounts and the values associated with each underneath. This company has land and land improvements, buildings, and machinery and equipment. Notice that depreciation is also listed. However, we will be discussing this at a later lesson. Next, let's look at a transaction involving property, plant, and equipment. On May 13, 2013, XYZ Inc. purchased a piece of computer equipment for $500 using cash. The asset equipment increased $500, while the asset cash decreased $500. Since an asset increased while another asset decreased, our equation will still balance. Next, we need to look at the debit and credit analysis. Debits increase assets, so we would debit the equipment account $500. Credits decrease assets, so we would credit the cash account $500. Our journal entry would have the date of the transaction, May 13th, with equipment debited and cash credited. The next step would be to take the journal entry and post it to a T account. Notice that equipment is debited $500, while the cash account is credited $500. Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.